All right, I'm going to review entries. This is all in the foundations course, and I've covered this about in a dozen different FAQs in the coaching program, but there's a lot of stuff in there, and so it bears repeating. Now, the first thing that we have to have for a supported spring crossing is that we must have an indisputable harsh winter. That means from whatever consolidation or noise chunk we have, from the time it breaks out to the time that we think this could be reversing into an SSC, there has to be an indisputable harsh winter. How big is that? It means like 1.5 frog boxes, or when you look down at the MACD Four Seasons, that it is clearly in the winter, meaning it is below the zero line, and it's out of the Red River, which is the plus or minus one Bollinger Band on the MACD signal line. So when you see it has left the Red River and it's below the zero line and it's failing, that is by definition a harsh winter. It will also be at least 1.5 frog boxes long. And why do I say that? Well, because the range stat is the maximum reasonable intraday move, and there's usually 3 frog boxes inside of a range stat. And so if it has moved 1.5 of those, a move of that magnitude from the breakdown is indisputably a large statistical move. And then when we break the range stat up into 10 equal boxes, 6, 7, 8, 9, 10, each one of these little R10s is 1/10 of that range stat. And so when you get a move of 1.5 frog boxes, you are essentially getting a half of a range stat move. That is an indisputably large directional move. And what that means is when the R10 has reversed from its little point, it always reverses at a sharp point, and that's where the PSAR dot is going to print when it flips and starts to move up. What that means is you're going to be entering with about an R10's worth of risk. It has bounced and it's moved at least an R10 off of that turning point. That means that if it just gets back to the previous height, you're going to get 1, 2, 3, usually 4 of your risk boxes. So when it is in play in a harsh winter, the conditions are set for a reversal that is statistically large, and it lets you get a favorable reward to risk ratio. Check or hold.
Check.
Now, if there is a gap from the open, like it, sorry, let me draw this better. If there was a, here's where it closed, and now it opens down here, and you have that size of a gap, we treat that as a giant red candle. And now what you already have is something that is in place. So it could actually start reversing from the first bar. That large gap is the basis for trading on an OR3 or an OR10, the opening range 3 or opening range 10, because you have a large move implied based on the size of the gap. So a large gap means that it is also in play. So the first constituent of this entry is I have to have a harsh winter. So that's number one, harsh winter. Number two is that the R10 has to reverse. It was going down, now it's going up. And because of the way the R10 is computed, that is always a sharp point. And that will also be the price where the PSAR is going to end up flipping after the RL10 has moved far enough to hit the descending PSAR. Because we have the PSAR connected to the price value of the RL10, the PSAR doesn't flip until the RL10 itself hits the PSAR. Then when it flips, it will come down and draw the lowest dot exactly at the price where the R10 flipped. Now, when you have a large magnitude move like that, and you have a clear reversal sign like that, then it's not unreasonable to think that this thing could just simply retrace to where the original breakdown occurred. And that's where we get the favorable reward to risk ratio. Now, under certain circumstances, we notice that this harsh winter could have been a panic sell-off, which triggers a panic buying, and what you end up getting is the first couple bars off the bottom can pull away from the RL10. So if we wait for the RL10 to hit the PSAR so that it can flip, it's not unusual in those circumstances to see that price has already moved well beyond an area where we would like to enter. So what do we do about that? What we do about that is that we take the trigger to be the descending PSAR, and now the R10 has reversed, and now somewhere in here, the price is starting to move up. Now, in the bar where the price is live, the PSAR dot hasn't printed yet because the PSAR doesn't get printed until this bar closes. So if this price level closes above the previous PSAR dot, then and only then does the PSAR flip. And now the flip is down here. And then the soonest we can get in is after it opens, and it may already be going up. And as you have noticed, a lot of times that has already taken the easy money out of the equation. So what can we do about that? Well, here's what we can do about that. After the R10 reverses, the soonest that I am allowed to get in is on a 1, 2, 3 entry. So if that was the price bar when the R10 reversed, if I see this pattern, a 1, 2, 3, then I can enter at a breakout higher than bar 2. So I can enter right here, if and only if the following conditions apply. I have the low of bar 1, I have the low of bar 2, and now bar 3 is live, and the current low is still higher than the low of bar 2. And while this bar is live, it takes out the highest high of bar 2. Then I'm allowed to enter here on a 1, 2, 3 entry, and my initial risk is going to be down to where the R10 reversed, which is where the PSAR is going to print, but it hasn't printed yet because the R10 is lagging and hasn't hit the PSAR yet. But I know where it's going to print because mathematically, it's going to go where the bottom of the R10 was. So if my entry is here, the price that invalidates that is still going to be a violation of the previous lower reach of the RL10. So now my risk box is this. I draw my risk box to where the PSAR is going to print to. And this, if this price is moving at an accelerated rate, you could get an entry 1 to 2 bars earlier than waiting for the RL10. The RL10 will reverse, and then under normal conditions, you have the PSAR coming down. If this is an orderly move, like if these bars are just small and it's just cruising its way north, it's not bad to wait for the RL10 to cross the PSAR. because by that time, the dragon will be down here. And what you will have is the ordinary entry of this, which consists of the following. A harsh winter, the R10 comes to a point and reverses. You have the RL10 crosses the dragon, and then the RL10 takes out the PSAR, and then you can enter on the SSC. The only time that doesn't work is when you have that after the R10 moves down and then price just takes off like crazy. Well, those are the moves that you want. But if you wait for the RL10 to cross here, it's too late. So the first priority, the soonest I can get in, is the 1, 2, 3 entry. The second one is if price breaks through the PSAR -1. Now, we talked about that in the last coaching session, or two coaching sessions ago. So how does that work? It works in the following way. Because on the live price bar that's moving up, the PSAR hasn't been printed yet. So I go to the previous bar, the -1 bar, and that PSAR has printed. And all I do is I just put a limit order on the previous lowest PSAR. And then if this price bar explodes and goes crashing through there, well, I'm in at a preferred entry on an explosive move. Check or hold?
Check.
Now, to your other points, yeah, if you the life cycle of these moves looks something like this. The RL10 will reverse down. The baby dragon is a 3-period simple moving average of the RL10. And that will often look like this. That when the RL10 reverses, you'll get it crossing its own 3-period simple moving average. Then you will see it crosses the dragon, which is that 10 SMA, plus or minus 1 standard deviation. So you'll see the RL10 enters the dragon, crosses the spine, leaves the dragon. Then you will see the PSAR is moving down. And that's the one where the PSAR -1 we would enter. And then you'll see the simple moving average 30, which is the middle of the river, looks like that. That's the SMA 30. The size of this harsh winter move, this move away from the SMA 30, that move, which is the harsh winter, is the move that we're trying to capture if we entered on a 1, 2, 3 entry, when it takes out the PSAR -1. You could take it at the skin of the dragon, or when price leaves the dragon. Any one of those is an earlier entry than the PSAR -1. Typically, the PSAR -1 still gives you enough room in order to trade to the SMA 30. Now, at the SMA 30, that is where the price gets tested. Is it going to hit that and reverse? If so, then this whole rolling over process is going to give you a COTA 2 entry to the downside. It's going to confirm that the original harsh winter could only get to the SMA 30, and now it's starting to resume the previous big move. So any entry on the short side in here is a COTA 2. If you go to the bottom of the RL10 and that breaks, now you get a collapsing dragon, which confirms that the harsh winter is now continuing. So if you want to front run the collapsing dragon, you can do it with a COTA 2, but after that RL10 rolls over, but before it crosses the previous low of the RL10. Now, if the test is successful, then this thing may halt a while, but then it continues for another leg. And then we would think of this as leg one. And then there's another leg two of equal size when it goes across the SMA and it overcorrects in the other direction. And that's where you get a massive trade. The final point I'll make on this is that if you know what your R10 is, and then 2 times the R10 gives you an R5, this is 1/10 of the range stat, and this is 1/5 of the range stat. You can actually make the trade so that when the R10 comes to the bottom and starts reversing up, it's going to go up as far as it's going to go, and we don't know how far that is until the R10 peaks. One thing that you can do is you can have a contingency order here that says from the bottom of the RL10, which is where the PSAR is going to flip, I can just put an R5 box, which is 1/5 of the range stat, and that's less than a frog box. And if price in this little cloud of dust over here and all this chaos, if it ever moves an R5 off of the bottom, I can just elect to enter on the basis of a positive price movement and use the R5 box, knowing that I'm going to have at least 2-to-1 just getting back to the SMA 30. Now, that's a lot easier than reading the chart patterns and all that in some ways. But what I like about the chart patterns of the 1, 2, 3 is I have visual confirmation over 3 bars that it's working. And when it crosses the dragon, I have visual confirmation that it has gotten through this noise barrier and has left behind this low price action, and it's actually moving up. And then when price goes through the PSAR -1, I have the final confirmation that I might need in order to just get in. But it's also possible just to trade with an R5 move off of the bottom. So in practice, what that might look like is if you are trading between the extreme points of the R10 channel, you might end up giving an R5 off the bottom in order to get long here. Sorry, that should be green. And then at the R10, because you want to lock in the gains, maybe you only tolerate an R10 off the top. And so you end up capturing an entry here and an exit here, and then you get all of this. And you're just shaving off a small manageable box, and you'll end up getting about 80% of that move that's in the middle. Check or hold.
Check.
Okay. Back to our regularly scheduled session here. So we're going to take a look at, this is CLF. I'm on 10 minutes now. So here was yesterday's close. This was the open. This was the top of the OR10. The next bar opened here and then kept going. So I ended up entering here. So I'm going to be long from there. And in CLF, that yellow box is my standard risk box for CLF. It moves immediately in my favor, 3 bars. By that time, I should have my initial stop, which was here. I should have that above my entry, maybe to here, so that I can lock in that extra wedge, the no lose plus dinner for two. And the rest of this is just managing the exit. And the way I'm going to do that is I'm going to watch the slope of the RL10. As long as that thing is positive, I can afford to have my stop at this rising little PSAR dots as these PSAR dots go up. The minute I see the R10 roll over, then I'm going to jump my stop to the skin of the dragon. And that's going to be my standard exit on the RL10, or a 10-minute chart, I should say. Up, the R10 has rolled over, so I jump my stop up to the skin of the dragon, and I exit with about a 3R win. Now, there was an opportunity here for a COTA 2 reentry somewhere around in here. After the R10 bottoms out, I get a 1, 2. I could have entered right here, but it's already kind of late in the day. I didn't take it. It just kind of ground sideways. So that's the sniper trade of the day in CLF. Let's see. Here's a 10-minute chart on XLE. This is energy. $10-minute. Here was yesterday's close. Here was the gap up opening. Here is the first 10-minute bar, which then closes here. So that makes this the OR10 in blue. On the next bar, it opens and then started to fail again. So I get a short right here. Check or hold?
Check.
There's the standard R5 wrist box in energy. It moves in my favor. Up, the R10 reversed, and I take the exit at the skin of the dragon for about an R. There is a SSC entry, and this is the case where price did not run away from me. All right, this little sideways action here, that was not some runaway move that left me behind. This was just a turning point, which got me out of the trade, and then it just chugged along sideways. The good news is that it did not fail further. Did not fail further. And now price actually and the RL10 come through the dragon. They hit the PSAR. So I make my entry here as an SSC, and there's my standard risk in XLE. It's the same size as that risk box. Here's my SMA 30. Here is my VWAP. Here is the high of the day. And here was yesterday's close. So all of those are price targets, reasonably available on the way up. I don't know how far it's going to go, but if it gets back to here, to where it was during the day, I can't be surprised, and that would be about a 2-to-1 trade. So the trade is framed. There's the SSC. It gets to the VWAP and the Bollinger Band mean, and then it just kind of rolls over. I exited at the skin of the dragon along the VWAP, so I'm able to capture this much on a risk of that much. So that looks like about a 0.3. So here's +1, and there's 0.3, so that's 1.3 for the day on that one. And the rest of the day, as usual, energy did nothing else. Here's US Steel. $10, US Steel. Yesterday's close. Here's the OR3. It gives me a 1, 2, 3 entry here. I front run the OR10 a little bit. Standard risk, half an hour loss. Re-entered, I treat that as a kata 2 because I notice that it has a low of the RL10 belly from yesterday, and this RL10 belly is a little bit higher, and it has given me a 1, 2, 3 entry. So I try it again. Same risk. That one works. They all look the same leaving the station. So this was minus 0.5. This one is 1, 2, 3. I take, when this rolled over, I take the exit at the skin of the dragon, 3R, and miss the follow through. There was a continuation pattern available if I was really hungry. There would have been a kata 2 right around in here where the R10 reverses and comes back out of the dragon. And I could put an initial stop here at the PSAR, and that probably would have scratched. There was a kata 2 available here, but it's too late in the day. So I take my +3 minus a half and net 2.5 for the day. Here's EWZ, Brazil. Big gap down. There's yesterday's close. Here's the big gap down. So I treat that as a giant red candle. That means this thing is in play. There's the OR3. Probably should have shorted there and then would have exited about here. And then the OR3 entry, or the OR10, excuse me, is right there. Span of control issue. I want you to notice this is also a 1, 2, 3 entry because here's your low bar. Here's the second bar. It had a higher low and a higher high. And here's your third bar. So I've got a higher lows and higher highs, so I can get in right here. That's a 1, 2, 3 entry. That's the standard risk in EWZ. It moves and then does nothing, so I scratch. Kata 2 re-entry. Why is that a kata 2? Well, because we had a successful first trade, and here's the low of the RL10, and here's the next low of the RL10. That's a rising low. It's above the VWAP. It crossed the dragon. It broke through the PSAR. So that's a kata 2 entry. And there's the standard risk. And my targets would be the Bollinger Band mean and then yesterday's close. Grinding and then nothing. It's already 3 p.m. So there's a fractional win on that one. So that nets about 3/4 of an hour for the day. Not much to report on in Brazil. Here is Mexico. Here's yesterday's close. Here's the gap down. There's the OR10. Here's the short at a breakdown of the OR10. And it turns out that the size of the OR10 box happens to be identical to the size of the standard risk in EWW. Sometimes it just works that way. That one moves in my favor briefly, but then reverses, and I stuck around long enough to take a fractional loss. It went this high, then came back. It opened and then made a 1, 2, 3 entry. So I get long with the same size risk box, And now my targets are going to be the Bollinger Band mean, upper skin of the dragon, yesterday's close. So there's my entry. It moves up sharply in my favor. The R10 rolls over right here. So I jump my stop to the skin of the dragon, and that collects 1.0 against that minus 0.3. So we're about net 0.7 right now. The price and the RL10 break through the Bollinger Band mean. The dragon is rolling over. And I'm it's failing, but above the VWAP. So my targets are here, and then here, and then here, and then the low of the day here. So I've got 4 reasonable targets to the downside against my standard risk box, which is that big. So that looks like a reasonable trade to me. It moves in my favor. The R10 reverses. I take the exit at the skin of the dragon. It collapses. So I re-enter and I get another fraction. So this one, when we total this up, is about minus 0.2 plus 1, 0.4, and 0.2. So the 0.2s cancel out. So this was about 1.4 for the day. That's a grinding day in Mexico. Here's DIA, the Dow 30. So here was yesterday's close. Here was the big gap down. Here was a massive sell-off in the OR10. And like we talked about last night, that looks like a bottoming tail triangle. But it goes sideways, sideways, sideways. And then I notice a 1, 2, 3 pattern starting to work. And I notice that the VWAP has started to reverse and the R10 has reversed. And now I'm ready to enter in the middle of the dragon this time on a 1, 2, 3, 4 entry, if you will, with a standard risk. It moves in my favor until the R10 rolls over and I get an exit in the middle of the dragon for about 1.5 R. And then it just grinds sideways for the rest of the day. So those are the sniper trades of the day. Looking at the traders, here's Brian on the this is the euro dollar on 5s. He gets a micro win, a micro loss, does not take the stop and reverse, does not take the Kata 2 or the collapsing dragon, does not take the SSC, but nets minus 0.2, minor loss for the day. Gets minus 0.5 on the gold dollar on the 5s. For reasons unknown to me, he does not take that one or that one. Would have been a massive day. So this was, he was kind of only looking at this chart as a sideways quiet channel and didn't want it. The 2 higher time frames were screaming shorts. So this is a spatial awareness issue to work on. So no worries on that. We'll just, we know that there's opportunities and they're going to come and go. Hamad gets 0.3 in, this is the Dow on the 10-minute. He gets, let's see here. Micro loss, re-enters, gets paid, re-enters, gets paid for 0.3. There wasn't much there to get, but he got what was available. He got 0.9 on Mexico, so he out traded me on Mexico. And on Brazil, he got 0.1. So he was like, yeah, squeezing juice out of a rock. So he ends up over one in the by the end of the day. Now here's some auto trading from George. Now that trailing 2R stop, I'm not a fan of. Like on this one, if you're using those accelerated jump stops, you could have theoretically cashed that win, re-entered here, cash that win. Or if you wait for it to be an above average win, you end up getting this trade instead of letting it come all the way back below the Bollinger Band mean. And so you only get a 0.6 on that when I think there was a 2R trade available. So I'm not a fan of the trailing 2R. Now, if this should be a Kata 2 re-entry, so might check your rules on that one. This one you had 15 bars for it to fail. It did not. And so at this point you were +1 and then we let it go to -1. So I don't like the 2R trailing stop. In fact, on this one, I would be arguing that when this does not fail, you should be getting out here and entering the long side right about here. And then that's a positive trade. So we need some work on the trailing stops. This one is, oh yeah, it's the same one, sorry. Same one on this one. You were over +1 on this one, and we let it turn into a loss, and then we didn't get the Kata 2 re-entry here. So there's some refinement on the auto trader rules. This one, to me, if I'm trading this one just from the charts, I love this entry. When it fails right away, I'd like to be getting out somewhere here on the PSAR, and that's where I'd like to be short. And then when the R10 reverses, I should be exiting either here or here along the skin of the dragon, and I should be getting long here. After a harsh winter, notice the harsh winter that has reversed and come into the spring. It's the summertime right here, and I've crossed the Bollinger Band mean. I should be crushing that. Same on this one. This is still, I think, the same afternoon move. So double check your rule sets. We should be getting that trade. Yeah, this one you ended up, I think that's a little late, maybe a bar late. And to the point from earlier today, that when you get that explosive move up, and if you're taking the RL10 crossing the PSAR, you don't get the entry till here. But if you get the price moving through the PSAR -1, you get that entry here, which is a much better entry than that. So just some, that's sort of a living example. You'll see the same thing over here as well, that you had the harsh winter. And then when this one, you end up entering when it crosses through the previous PSAR. So you should be getting, in that rule set, you could get an entry like right here on the SSC. Whereas if you wait for the R10 to cross the PSAR, you won't get your entry till up around in here. And you miss the fat part of the curve. So that sort of is the justification for the accelerated entry. And then if you look at the 1, 2, 3 entry, you'll notice here's a low. I don't think that's a higher low, but you could theoretically get in here on some kind of 1, 2, 3. But the PSAR entry is more than enough to get you in on that move. Excuse me. The daily report. There's that CLF move right from the opening. The 150-day look back. This is still really positive. We're at the, extreme moves up off of the 150-day low, which was back here. The 150-day high was made here, so we're still way, way overbought. Notice how strong that Kata 2 entry was. It got us into that entire move. When we look at the daily, there's a cooling off period that has been going on here, it looks like. You've got the 3-day VWAP is here, the 5-day is here, the 10-day is right here. So this is fair value in this region where price closed. This is all fair value. We're within shooting distance here of the all-time high and the peak of the RL10. So any breakout above, say, 549 is going to be massively positive. But we have a tight stop suggested by how close the PSAR has gotten in here. So we only have about that much wiggle room, which feels good to me because a stop right here is going to protect the gains that were made on this nice move. And it's had 5 days to make new highs and it hasn't. So I've got a nice tight stop on that for Thursday and Friday. And I'm ready to make bank on this and raise cash if it falls below this price level. But if it breaks above 549, I'm all aboard. So we're coming into the station, is how I would think of that. All right, on the dashboard one, we're in bullish quiet. That's favorable. Pretty much overbought across the board, except on the 10-day. It's kind of a range compression. You notice we're back in the normal. Volatility is quieted a lot. It can support a strong surprise move in either direction coming out of the quietude. A handful of our large caps are better than 2-to-1 on the auto framer. Oh, pen is acting dumb here. Sorry. There's a couple 551W continuations. There's one triple screen here in Texas Instruments. Nothing else much to report on. Strong day in Tesla. In the ETFs, no breakouts in either direction. Plenty are on the favorable numbers on the auto framer. You can just notice how bad the sell-off has been in Brazil and Mexico. So you got to think, is that a value play? Is this ready to start reversing? Maybe we saw some of that in here recently. So old time weakness, short term slight improvements. Maybe that can be happening. I'll be on the lookout for that. Lots of auto framers. Again, this gives you the mechanical entries if you're using end of day data for mechanical entries, initial stops, and targets. And that's your reward to risk ratio based on the framing data that's available. A mix between summer and winter here. Mostly weakness today. There were a lot of cases of short-term weakness popping in here. Cliff and US Steel in the metals showed resilience. Tesla had a good day. as did Microsoft, as did Apple. So this is still a tech-fueled rally. In the ETFs, you had a good day for the S&P, a good day for the NASDAQ, great day for consumer discretionary. Energy and tech here, or metals and mining and tech, pretty good days altogether. So it's tech and the metals right now. Everything else is showing some weakness. Standard names on our trading value list: marijuana, Tesla, Nvidia, clean energy, Intel. Lots of goodies to choose from. And then our final chart. We're still grinding north of the river. We're at a critical state. We're at the extreme of the normal for all three of those. So this is a place where we could see a tactical pause to sell off to the bottom of the river. Or this could be the point where we get a 2-day running start into the weekend and beyond. So compound critical state, I'm using tight stops, limited overnight risk, and ready to take advantage of short, sharp moves among the leaders and the laggards. So I'm looking for the extreme leaders in tech and then laggards like in finance and energy. All right, that's everything for tonight. We'll get this published and posted, and we'll get ready for them tomorrow. Take good care.
Thank you, sir.
Yeah, for Joe asked, yeah, the dragon is plus or minus a half standard deviation on the 10 SMA. Correct. Half a standard deviation.